Question of the week this week is long-term care insurance a good idea? It's a great question. And back in the days when long-term care insurance first came out, it seemed like a pretty good idea. Premiums weren't all that high, benefits were pretty good, and the benefits were more defined than they are now, if you will. Now that long-term care insurance has been around a while and insurance companies have seen how it actually pans out for them, they've adjusted the rates up, the benefits down, and I think the benefits have become more ambiguous. Nobody really seems to know for sure what long-term care insurance is going to cover and what it's not going to cover. We've run into at least one person who was able to benefit from long-term care insurance, or their spouse was, but we have run into multiple other people who have paid into long-term care insurance and never realized the benefit at all. For example, one of our clients, he died last year, he had paid into long-term care insurance for a long time, almost $70,000 into a policy. When he died, he had not used his long-term care insurance benefits whatsoever. Do you know how much of those went to his wife? Unfortunately, it was zero. Zero went to his kids. There was nothing left. The policy was just gone, along with the almost $70,000 he funded it with over the years. Another example is a lady who called our office. Her and her husband had long-term care insurance. I think it was some kind of joint policy. Her husband had died in his 80s prior to using any benefits from long-term care insurance. This lady is now 92, and she has not used long-term care benefits either. It's a great thing. She's sharp as a tack, lives at home, lives alone, drives herself, still very capable. According to the policy, however, they started deducting the amount that it would cost to keep her in assisted living. Well, she doesn't need to live in assisted living. She still lives at home, and she's quite capable of doing so. The policy, however, paying out this benefit being deducted from the policy is going to kill the policy by the time she is 97. She still doesn't seem to think she's going to need long-term care insurance at any point. She decided to cancel the policy and take what little benefit she could in cash because it's better than losing everything they paid into it over the years. Now, when this guy died, his life insurance paid no problem, paid his family, paid his beneficiaries. That was a good thing. So what can we do instead of long-term care insurance to plan ahead in case we would need long-term care? Other than the obvious things like taking care of ourselves and staying active so that hopefully we don't need to depend on somebody else for that care. Here's one example of something that is very effective and gives you lots of options when it comes to long-term care. If you fund a life insurance policy, and this has to be the correct type of life insurance, participating whole life insurance is the best. Basically, you want a policy that creates this cash value and doesn't consume itself like a universal life policy would, or not build up anything like a term policy would. But a whole life insurance, participating whole life insurance, even better, builds cash value like this, which is exactly what it sounds like. It's the value of your policy if you were to exchange it for cash. While you're alive, you can borrow against your cash value and you can pay it back. If you've been watching us for any time, you probably know how to do that. You may even have a policy like this, and you may have even borrowed against your cash value yourself and know how that works. Let's say down the road at some point, you have the need for some healthcare or some help to live. If you can't perform some of the activities of daily living and you could really use a benefit like a long-term care policy would provide, but you haven't been funding a policy, how can you fund that without being a burden to your family? If you have cash value in a life insurance policy, you can roll that into an annuity. Now, annuities are similar to life insurance policies. There's good ones and there's bad ones. So for this example, we are going to use a guaranteed fixed annuity. Now that you've rolled your cash value into an annuity, you are guaranteed an income for life. That means every month that you live, you will get an annuity payment. So the first month of your annuity payment, you get money to spend. Maybe you use this on some sort of care. If you were getting this benefit from a long-term care policy, you wouldn't be able to hire, let's say, the neighbor who's a retired nurse and likes to come into people's homes and help them, because long-term care policies require that you use an organization that has a license and the medical certifications and all of that, and you can't receive the care in your home. You have to actually be in a facility. That costs a lot more than hiring somebody to come in for 1 or 2 hours a day, if that's all you need or all your loved ones needs. maybe it even costs less than this. So you would use some of this for the care and some of this for something else. You have options when you're getting the money and you can decide what to do. When you have to qualify for benefits, it's not that clear. The nice thing about this annuity is that it promises to pay you this money every month until you die. So let's say that you live a long time after starting to take these payments. You never have to worry about this bottle or this annuity running out of money because it never will until you die. Even if you outlive the money that you put into it and all the money that it earned in the meantime, the insurance company will still continue to add money until the day you die. That's a beautiful way of making sure that you have money coming in to help with long-term care expenses. If you want to look into getting a whole life policy with good cash value so that this would be an option for you, or if you have cash value in your life insurance that you want to consider putting into annuity so you can start funding long-term care or something along those lines, then be sure to call our office. We can help you think about those options, explore what's possible, and get you what you need if the time is right. Something else worth mentioning is that it's better to have the cash value in life insurance all the way up until you need the annuity, because annuities are sort of like reverse life insurance, where they work better the older you are. You know how you want to get life insurance when you're really young because it's inexpensive? Well, you'd rather get an annuity when you're much older because it is going to pay much higher because your likelihood of living a long time has gone down. So that's something good to keep in mind, and that's another reason that we would rather have the cash value sitting in life insurance rather than an annuity or in a long-term care policy.